Hey, folks, thanks for tuning in to our MMG weekly recap. So, rough week. Goodness, who would have thought September would be even worse than it was back in June? And here we are. And just a reminder of what took place. Obviously, we had the Fed meeting, raised rates by 75 basis points. And what the Fed led us to believe a few things. Number one, they're really bad at forecasting. They ratcheted up. They've increased their inflation target. Remember, they do monthly or quarterly economic projections. They raised their target for inflation, they lowered their target for growth, and they raised their target for interest rates. So you add it all together, it's just not a really an ideal setup for an economy. It means slow growth, higher prices, stagflationary, and the next shoe that is going to drop is certainly going to be the labor market. So we have that to deal with. And we're in this price discovery mode now at in the bond market, which is making things really dicey for us. The Fed has had a tough time mentioning the word recession. That is there. We're going to find out about that a little bit more next week when GDP comes out. And overall, with the Fed saying they want to go higher for longer, they want to raise the Fed funds rate, maybe another 75 next month, and maybe another 50 come December, and let's see how the market reacts to it. And what should be coming, at least to folks in the mortgage and housing space, is that at some point the Treasury market's going to say, "Nope, enough's enough. You've gone too far," and that could be at any moment. Unfortunately, we're data dependent. We have to follow the news really, really carefully and watch how the markets react, and that's how we have to guide our pipelines. And unfortunately for us, seeing the 10-year note move above 3%, 350 means that 350 is probably for the near to intermediate term, probably about as good as rates can get until we get data. But remember, that data can come next week by way of PCE, GDP. Some of those figures could change things. And then, of course, on top of all of it, we have the parade of Fed officials back at it, which could obviously add more uncertainty and volatility to the market. So I hope this finds you well. Have yourself a terrific weekend. Be safe, and we'll talk to you soon. Bye for now.